Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at exactly what happened to Bitcoin 4 months out from the halving in the previous 3 cycles. So exactly at the point where we are today, I'm going to have a look at the historical perspective of what we can expect between now and the top of the bull market, which we're expecting in 2 years' time. I'm also going to be looking at the 12-month candle, which I showed you in the last few videos, as well as the 3-month candle, which is showing a completely different picture to the 12-month candle. So there is a fascinating picture developing on the longer term time frames. And as per usual, I'll have a look at the 60-day cycle and the levels to look out for in the coming weeks and months. So if that sounds interesting, you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. And before I get into the analysis, a very happy new year to you. And let's hope 2024 is an amazing year, just like 2023 has been. Okay, I'm going to start off with the 12-month chart. And a few videos ago, I showed you this 12-month chart for Bitcoin, and that this red candle here, we need to really get past above that by the end of 2023. And that would have given us a bullish momentum going into 2024. And the top of this candle goes back to the top of this candle here, which closed at 46,200. And unfortunately, yesterday, the 12-month candle closed at 42,288. So we're about 4,000 out on that. It doesn't mean the end of the world. It just means that there is bearish concern on the 12-month chart here. It would have been better to have gone above this, but it's not a calamity that it didn't. And we've just started the 2024 candle here with this little line here. And if you look at the previous cycle, at the end of the bear market, this candle here, we also didn't get past the 12-month candle. And we actually left a wick over here, which meant that there was a rejection of higher prices. And even despite that bearish nature of that candle, the following 12 months still ended up being bullish. And we went above that candle there. So let's hope we get above this 46,000 soon and see what develops over the next 12 months. And going on to the 3-month chart where we saw that Hikake pattern developing. Hikake pattern is a bullish pattern at the bottom of a trend. If you've been watching my videos, you'll know that this Hikake pattern is a pattern which is developed between 3 and 6 candles. So you have the Marubozu candle, this deep red candle to the downside, followed by a Harami candle whose top and the bottom is encapsulated within the top and the bottom of the previous candle. And then the third candle gives you a lower high and a lower low, which gives the impression that we're going to go much further lower. However, between the next 4th, 5th or the 6th candles, we have to get above the second candle. And this is exactly what we've done on the 4th candle. We closed above the 2nd candle. So that's the setup here. This candle could have been the 5th and the 6th and still be valid, as long as it went above the 2nd candle. So this candle pattern now, having broken above the 2nd candle, went sideways, and we've now broken out of that. So we would expect the next candle to go above the high of this candle, which is at 45,000. So between January, February and March, this pattern gives a high probability outcome of a break above this candle here at 45. So let's see what develops. But on the 3-month chart, it looks very bullish. On the 12-month chart, there's a little bit of a concern. So let's see where we get to on this one. Okay, I'm going to look at the main part of this video, and that is give some sort of a target of where we could end up between now and the top of the bull market based on the previous 3 cycles of what happened 4 months before each of the previous halvings. So currently we are now 4 months away from the halving, which is expected to be around about the middle of April. So what we need to really look at is that in the previous 3 halvings, 4 months before those halvings, what did the Bitcoin price do? Because we know that they tend to follow similar patterns. So the idea is to really project on a general trajectory basis exactly where Bitcoin could end up within the next 2 years, where we expect the bull market to end at the end of 2025. So what I'm talking about is that first halving here, 4 months before that, if we take the trajectory from here to the top of the bull market in that cycle, and we project that at the top here is the kind of thing that we can expect for the next 2 years. And if we take the next halving 4 months before that and project that to the top of that cycle, we can have a look at exactly what that was telling us. And finally, in the previous halving, we can have a look at exactly what happened in the previous halving to the top of that cycle. And if we have a closer look over here, as soon as you put these three in line for the next 2 years, the first thing that's very obvious is that from where we are currently, the general trajectory over the next 2 years, you can see, is to the upside. The other thing to note here, very obviously, is that the first cycle was much steeper than the second cycle, which was much steeper than the third cycle. So does that mean that the current cycle that we're on is going to be even more shallower? The trajectory might be up, but the actual steepness may be shallower than the previous three. And from a 2-year point of view, if people are waiting for the price to fall down to a level where they want to enter, just based on these three previous cycles, that would seem a foolish thing to do, to be waiting for the market to fall. Of course, it can do that, but the probability would tell you otherwise, that based on the previous historical perspective, the market is more likely to be going up rather than giving you an opportunity for it to fall, for you to pick up the price at a lower level. And those with a keen eye will have noticed something, that in the first cycle, we actually got a very big blow off top in the last month of the top of the bull market. In the second cycle, it was much less so. And in the third cycle, it was even less so here. So the final blow off top has been going lower and lower. It doesn't mean that it's going to go even lower this time round, because we know that Bitcoin can actually surprise and take us to a different pattern. Of course it can. And this time with the ETF news and the story developing there, it could well be that we don't even follow this trajectory anymore. And as I've mentioned in the last many videos now, that it may well be that we don't have a right translated cycle like these were. We may have a blow off top within 2024 before a 2-year bear market rather than a 1-year bear market that we've had in previous years, here and here. So all very interesting developments going on, and we just need to be aware when we zoom out what we can expect. It's very easy to get sucked into a 1 hour, 4 hour and a daily chart when the bigger time frames are telling us a very different story. Okay, moving on to the 60-day cycle, I think we can establish with a good deal of probability that we've now bottomed out on day 60. And that was on the 11th of December. So when we bottomed out here at 40,181, that looked like the bottom of the cycle. And since then, we made higher lows along the way here. And what we really needed was a confirmation of this bottom of the cycle by breaking the 45,000. We haven't done that, but we haven't broken below this either. So at the moment, with a high probability that we have bottomed out on a 60-day cycle, and we are currently now on day 21. So what you would expect from a normal cycle, if it's going to be a right translated cycle, is to break the 45,000 level here before the midpoint, and then come into a midpoint low before going up and making a higher high to give us a right translated cycle anywhere around there of the end of the current cycle. And then the new cycle will begin there. So this is what I would be expecting. We should, with a higher probability, break the 45. And the ETF narrative, the story that we have, should take us beyond that. So we are expecting within the next 7 to 14 days for the ETF news to be given the green light. And that should take us above the 45. And I would expect something resembling a sell the news event, which brings us into the 30-day cycle midpoint low, and it really depends on how this will behave. It may well be that we make a deeper correction, then you're really looking at 38 and then 35 as the next levels. But currently we are in this range of 45 at the top and 40,000 at the bottom here. So how far this will carry on, we really don't know, and we would be expecting now that we're in the new cycle to be breaking this 45 in the next couple of weeks. And if we incorporate the pi cycle, these were our levels at the beginning of 2023. The first level was the RSI MTF line, this yellow line, and we met that at the $40,000 mark. And obviously with the ETF story being so strong, we've moved much further up now on that. And the RSI MTF line has now moved up to about 48,000. But the second target that we had was this pi cycle top, the red line here. And that currently is at around 58,700. And this is still a possibility with the news of the ETF approvals. If this can come back up, then I would expect some sort of a correction at this point on this red line. And that could then be around about between 58 or 60,000. So we'll just have to wait and see. But these are the developments I see so far with the 60-day cycle movements, as well as the targets that we've got, which we've had since the beginning of 2023. So going forward, what are the levels to really look out for? So obviously we've got this $45,000 mark here, and we've got this 40,000 around here. So should we break above this level here at 45, then if we zoom out, we'll see what the next level is going to be. So when you zoom out, you can see that this level here, 48,000, is a very big level. And this is where I would expect some sort of a correction, at least for a few days, maybe a few weeks. And the next level would be these levels here, at these resistance points. And that's around about 51 to 52,000. And if we put the pi cycle on, you can see that at the moment where the pi cycle is actually at the tops of these candles and the bottoms of these candles. So the support and resistance actually takes us to the pi cycle here, between 58 and 60,000. So going up from where we are, these are the levels really to look out for: 48, 51, 52, and then 58 to 60. And if we do fall below this level here at the 40,000, if we go below this candle, then we should have a little bit of a support at the 38,000, and the break of that will take it to the 35 level. So going on the lower sides, we're looking at 38 and 35. And if we look left here, after the 35, there isn't really very much support until you get to this level here at 31, 32. So these are the key levels on the upside and the downside for the Bitcoin price. So those are the levels to look out for in the upcoming weeks and possibly months. And those of you who have been following our swing trades with the Bitcoin miners, I can confirm that we closed all our trades with these results here. On Wednesday and Thursday, these were much higher figures, but unfortunately with the Bitcoin miners, we got a very big sell-off on Friday, and that prompted us to close all of our trades. And the end result was that with the 5 swing trades that we started only on the 20th of December, and we closed all of them 9 days later. So within a 9-day period on the swing trades with 5 miners, we had these results of 28, 27, 33, 12 and 23. And I think this one here, which was 23, was actually up 89% at one point. But we follow a certain stop loss entry and exit strategy with the Bitcoin miners, which meant that we just had to accept these profits here. And considering that it was only for 9 days, this is not really a bad outcome or result. So now that we've ended 2023, we've had 5 rounds of swing trades. This is what we achieved in March 2023 with these results based on the 60-day cycles, which is what we normally use to get into the swing trades. The second round, we achieved these results here. The third round, we got stopped out, which limited our downside. The round 4 gave us these increases, which were very good as well: 7.5, 33, -5, 57 and 8%. And of course the 5th round here. So altogether, when we add them up, the swing trades gave us back over 500%, but we actually started the swing trades from March onwards. So within 9 months, the results we got with the swing trades was well over 500%, which isn't really bad for a 12-month swing trade position, just based on a very simple technique of following the 60-day cycles and having an entry, exit, and a stop loss. And if you're interested in joining the Bitcoin Miners Private Members Club here, we will be continuing with our swing trades for the duration of 2024 and even 2025, based on the current cycle wherever it ends. So I'm hoping we should have another 5 rounds in 2024 and perhaps another 5 or 6 rounds in 2025. And if you want to join us there, all you have to do is click the like button here, and for the price of a coffee per week, you can join us with all the analysis on the Bitcoin miners in terms of the long-term play as well as the swing trades short-term play. Okay, so we leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.